Hello friends, welcome to Wawa's weekly update on money and economy. We begin with an important domestic event. The Reserve Bank of India's Monetary Policy Committee on 8th February 2024 has decided to keep the policy repo rate unchanged at 6.5%. CPI for FY24 is projected at 5.4%, while it is projected to be at 4.5% in FY25. RBI has pegged real GDP growth for FY25 at 7%. RBI projects retail inflation at 5.4% for current fiscal, 4.5% for 2024 to 25. On the ATM issue, RBI Governor Shaktikant Das said the central bank has been engaged with Paytm for quite some time, and although regulatory actions are in the best interest of systematic stability and customers' interests. Moving on to the impact of the MPC decisions on the capital markets. After the Reserve Bank of India's announcement to keep key rates unchanged post monetary policy meeting, the Indian stock market witnessed strong selling pressure on Thursday. The BSE Sensex witnessed a sharp sell-off and recorded a nearly 750-point loss in a single day. Also, no indications of future rate cuts disappointed the street. However, it may not have a long-term effect. However, bond yields are expected to trade in a tight range with US bonds yields. Moving on to news on the global economy, China's consumer prices fell at the steepest pace in more than 14 years in January, while producer prices also dropped, ramping up pressure on policymakers to do more to revive an economy low on confidence and facing deflationary risk. The world's second biggest economy has been grappling with slowing prices since early last year, forcing policymakers to cut interest rates to spur growth, even as many developed economies were focusing on taming stubbornly high inflation. The Consumer Price Index (CPI) fell 0.8% in January from a year earlier, after a 0.3 drop in December. The Producer Price Index (PPI) slipped 2.5% from a year earlier in January, after a 2.7% fall the previous month. The decline is a testament to weak domestic consumption. Also, a massive stock market sell-off is partially to blame for the decline in sentiment and associated consumption. And finally, we end with news coming from Japan's SoftBank Group, which returned to profit for the first time in 5 quarters on Thursday, as the Japanese tech investment firm was bought by an upturn in portfolio companies, sparking hope it was emerging from a period of retrenchment. Net profit totaled 985.5 billion yen in the 3 months to December, versus a 744.7 billion yen loss in the same period a year earlier. SoftBank shares jumped 11% on Thursday to the highest level since September 2021, helped by an upbeat revenue forecast. SoftBank also noted $1.825 billion in gains on the T-Mobile US shares it received last year after conditions in its 2020 deal to sell US mobile carriers Sprint to T-Mobile were met. The gains reflect an accounting time lag in assessing the fair value of their shares. That's it from us this week. Do like, share, comment, and subscribe to our channel, and visit our website www.oava.in for information on our courses. See you next week.